Welcome to Smart Investing with Philippe. Investor, I want to make a very quick and sweet weekly market wrap. So we're going to see exactly what happened during this week and why actually we just stay flat during the whole week, despite all the volatility, all the noises, all the fear, and everything that you are hearing on the headlines and all the mainstream media. Nothing really much happened during this week, and we're going to see it with the chart. So first of all, this is the QQQ for the last 5 days. You can see we've been trading between a range of 483 and 466. You see the whole week has been extremely fat. Nothing really to worry about, So now if you look at the year to date, of course we're still about 10% down, and we're still experiencing a bottoming process. I told you that we are bottoming. The good news is that today we are actually overall we are very green on the technology sectors, which is normal because they are the one who took the biggest hit. And you can see that we are actually seeing a bottoming process. I cannot tell you because this is a bottoming process. 1, 2, 3, 4 days red, but the market doesn't manage to go down. Then you have a big day green today. Not so big, but 2.3% is quite higher than usual for the Nasdaq. And you can see we are just coming back to basically the beginning of the week. So nothing really happened, you see? If you stay relaxed, like I tell you always, stay relaxed, don't panic. Up and down, big moves and so on and so on. This is okay, This is part of the game during correction, part of the game, the big move. But panicking and selling or rage selling, this is not a good thing. The same thing as rage buying and just following the FOMO and all the stuff like this, it's not a good thing. So overall, the volume has actually increased during the sharp sell-off, which is good because everybody who wants to sell have probably sold already. So if you haven't sold after almost minus 14%, at the lowest level, we're about minus 14%. Then why you going to sell after, Doesn't make sense to me. So I know there is a lot of noise about the tariffs and all the geopolitical aspect and so on and so on, but all this is a noise. They are just noise. And maybe that Donald Trump wants the market to crash a bit to help the Federal Reserve to decrease rate, because this is what they want. They want the rate to decrease. They want the rate to decrease to help the small people in the United States who don't hold their assets, who actually have a hard time to finance everything they want to do. So the goal of all of this is actually to decrease rates. So now if we look at the S&P 500, same story. You look the 5 days flat. You see, trading between 566 and 549. Nothing happened. Nothing at all happened. Just flat. Despite all the fear, all the cry, all the everything. You see, 1, 2, 3, 4, 5 days. Nothing much happened. We're just back to what it was just Monday, And again, the buy today is good, but the volume is not high, You see, the volume is extremely low. RSI is slightly moving up, which is a good sign. The same for the QQQ. The volume is extremely low, and the RSI is slightly moving up, but mostly trading sideways. Doesn't move much also for the last few weeks. RSI is still pretty much between 40 and 30. Nothing really changed about that. IWM small cap also, you can see the clear bottoming. A clear bottoming. To me, this is four red candle like this, don't manage to go lower, and then a big green candle that goes back to the beginning of the 4 red candle. This is a bottoming process, and again the volume is not very high, so there is not much convection in the buying, but that's a technical rebound. Actually, it's normal after so many sales pressure. You always have some technical rebound, but let's see next weeks if the selling continue or if just continue the bottoming process, or maybe slightly rebound to the upside. But the volume again is very low, and the RSI is actually still around 30. slightly moving up. So what we can see also that is, what I think is a bottoming process is the VIX. If you look at the VIX has massively come down from the peak. You see? Come down by 25% from the peak. And I tell you, usually the peak of the VIX, you know, when you have this movement, sharp rise and actually coming back, the peak of that VIX usually is where the bottom of the market is. That has been the case here. That has been the case every single time you see a peak here. And then again, you saw a peak also there. August last year, that showed a bottom of a market and a continue of the rally after that. That doesn't mean the rally forever. It's just like the end of the correction, at least for the short term, for the very short term, the end of that downside. Then you have now it's gonna retrace back up. Always been the case. So it will be very unusual that if the VIX just turn around again and just spike again, and then the market continues to go down. I don't think this is the scenario we're gonna see. I think we're gonna see is a slightly, maybe some sideways, and then the market goes up again. So don't really hold your breath. I've seen this many times. I've seen this many times, you know. Then let's go to the Max 7. I told you this will hold the 0.61 Fibonacci level, and it did. And the bottoming process is also showing on the Max 7. The Max 7 now, as a group, you are buying for 20% discount. Today I place a lot of trade on the Max 7. I want to take opportunity to buy the biggest company in the world, the most profitable company in the world, the most successful company in the world, the most robust company in the world for 20% cheaper. I started to increase my holding, DCAing my holding on my Max 7. Even more than the QQQ, because I think the QQQ minus 10% is not enough. I will top up my QQQ when there is a downside of minus 20%. And this is what we have with Max 7. Max 7, you have 20% down, even 21, 22% down. I topped up. Actually almost double my holding with Max 7. I still have a lot of cash if it continues to go down. But you will never be able to call the bottom precisely. But we are around the bottom. I'm pretty convinced about that. So if you look at individual names, all the Max 7 go up, especially NVDA, you see? NVDA went down to 104, you're already up to 120. So you see why you should not sell or rage sell or just give up your shares like this, because you see how much it can rebound from the bottom. Already a rebound of 15%. 15% in 1, 2, 3, 4 days. Tesla, not so much, but the bottom is here also for Tesla, I believe. Went very close to the 200. 200 is a very important level psychologically. But by buying the Max 7, I bought also Tesla for 50% discount, you know. I don't want to buy individual stocks and so on. I prefer to buy a basket of Max 7 and take the opportunity of every single Max 7 that I can get, you know. Whether it's Tesla minus 50% or the other at minus 20% or NVIDIA at minus 30%, you know. I just prefer to buy the basket. It's more efficient for me, and also it allows me to be diversified within the best company in the world. So, you know, this is my strategy. Otherwise, if you look at some of the key stocks like AMD, also bottoming process the same. I told you it will not go through the Fibonacci of 0.78 because otherwise it's a full retracement back to 2023. Very unusual it will do that. So that's the bottom. Palantir massively up today, plus 8%, you know. But still, we can see a bottoming process. Same thing. Bitcoin. You see also a bottoming process at the 200 moving average. The euro dollar, now back to the usual trading range between 23-24 of 1.08. Don't expect it to go much higher than this. IWM, we saw it already, defended very strongly the channel. I told you, if it goes inside that channel of 200 and 164, actually that was traded more than 2 or 3 years around that channel, then it will be trapped again in this channel. So that level of 200 was defended strongly by market participants, and it never really managed to break through, and now it's pumping slightly above the 200. Again, if you don't have investment on the small cap, that's a unique opportunity for you to buy the small cap. That means you go back to the beginning of 2024, the whole 2024 for people who bought the small cap. The profit has been erased. Thank you. I have all my profit being erased. But never mind. I believe small cap will pop up. Maybe it's not now. Maybe it's later. But it's extremely, extremely cheap. And the rally has not happened yet on the small cap. So I think at some point there will be a catch-up move from the small cap. And we can easily go 50%, even 100% in 1 or 2 years. So I keep that holding anyway. I want to be diversified. So it's also part of my diversification. Yeah, I don't think that it will go much less than 200. So this is part of my strategy to diversify. So if you look now at the economic calendar this week, what we have seen, important numbers. You can see that job opening was higher than expected, which is good. The job market is holding really, really well. Core inflation on Wednesday, you saw that inflation across the board was lower than expected, which is very good for the Fed to start to think about decreasing rates. And that's very bullish for stock. If this is what Donald Trump wants, the Fed to decrease rate, because they want to help the small American, not the rich American. But at the same time, when he do decrease rate, he will help the rich American, because when you decrease rate, you prop up the assets. When you decrease rate, you inject liquidity on the economy and you create an inflation of assets. And also it's part of the DCA process. If your denominator is smaller, that means your present value of all the future cash flow estimate that you have is much higher. Anyway, that's mathematics. If you look at the PPI on Thursday, PPI was extremely good also. PPI even negative for months on months. Core PPI minus 0.1. Expected 0.3. Core PPI year on year 3.4. Expected 3.5. Initial jobless claim 220,000. Expected 225,000. You see, PPI, ex food, energy, and trade 0.2. PPI month over month 0%. PPI year over year 3.2% as opposed to 0.3 and 3.3%. So all these numbers show that inflation is under control. So that doesn't mean the Fed will decrease rate in March. I don't think that they will decrease rate this month. But probably in the next meeting, or probably in June, they will start to decrease rate again. Because I showed you the Fed expected the rate decrease, right? Look at the Fed's website. If you see, by the end of 2025, they expect the rate will be at this level at only 2% probability. That means more than 98%, 97% that the rate will be lower than the today rate. Even they expect 1 year at 2, 3, 4, 5. Even a 5 rate cut has been priced into the market. I don't think we're going to have 5 rate cuts. If we have 5 rate cuts, just hear me. If we have 5 rate cuts, the market will go banana. The market will go banana. We're going to have a huge rally in the market. If we go from 425 to 300, I tell you, we are going to be so happy, you know. Other than that, I think we should really wrap up and go for a nice and relaxed weekend. Because next week is going to be another week of craziness and a lot of uncertainty again and a lot of stress. So enjoy your weekend. Don't think too much. Take the opportunity of this sell-off to buy and enjoy the ride up, because we are very close to going back up again. Unless something extraordinary happen, I don't think that you're going to see Max 7 going much lower than 20%. I don't think you're going to see the Nasdaq go much lower than 15%. It could be. Will there be a recession? Because it's all the talk about recession. Maybe there will be a recession, but so far you saw the economic data. There is nothing showing recession in the US economy right now. I know the market is anticipating and it's a discounting machine. And it goes down much, much, much lower before even the recession happen. And when we are in the right middle of the recession, the market already start to go up. So you see, it's the way the market works. But don't panic. Stay under control of your emotion. Stay under control of your investment. Is my portfolio recession proof? No, not at all, because I'm geared like mad in my portfolio, you know. I don't invest in dividend, defensive stock and all the stuff like this. I invest in high beta, extremely high growth company, like the technology company, or AMD, or Max 7, you know. Some of the small cap also have some small cap name on biotechnology, or some of the high gear sectors, you know. But I don't play with defensive sectors. I don't play with defensive name or dividend name. I want the full when the market go up again. If you do a chart between the Nasdaq against any defensive sector, you would be ashamed about the return difference that there is. Even if you have even 2 years of bear market for the Nasdaq, it will just trump any defensive sector stock over the 5 years period. But not by 1 or 2%, by 3 or 4 or 5 times the return, you know. Anyway, do what you want, but this is the way I do my own investment, because I'm still young. I still many years before I retired. I don't want my portfolio to be in low beta stock. I don't want to be in my portfolio outside what is the next industrial technological revolution, which is AI, robotics, automation, and all the niceties of digitization and all the huge technology advancement we're going to see in the next 5 to 10 years. I want to be right in the middle of that increase of productivity and that boom into new technology. And this is where the biggest money will be made, in these sectors: technology sector, biotech. Even if you go into large cap market, Max 7, you're going to see big growth. The same of the last 5 years going to see in the next 5 years, even probably more. They have huge size, they have huge economic mode, they have huge scalability. They invest massively into those new technologies. They're going to be very successful. They're going to be very successful. There's no doubt about this. And if you invest in the basket of Max 7, even if one fail, the 6 others, they will actually erase the loss of the one who failed. Who cares? It's part of investing. In order to win, you have to be able to lose. You need to be ready to lose in your mind, temporary, in order to win in the long run. So having said that, thanks so much for watching this video. It's very, very short. And I wanted to show you that with all the noise that we've seen, actually we didn't move an inch on the market. We are just bottoming. We are not going lower. We're not going higher. We're just bottoming. Trading sideways the whole week. You see, when you just take a step back, look at the chart, people are talking about, yeah, we're going so much lower, so much lower, so much lower. No, we didn't move at all. We just stay exactly at the same level. Okay, see you next week. Please subscribe to the channel, like the video, and please make a comment. Help me to grow this channel so we can grow a community and grow investment together. And I can start also to make some online training, free online training and coaching. And I want to make also some Discord and some community online. But for this, I need to have more members. I cannot just do with 1 or 2 or 3 person members on the channel. You know, that's not possible. I have to do it for at least 100 from 100 members of the channel. I will start to do this, and I will help you. I will help you to do a more hand-on follow up of the groups. I will start to show you my portfolio. I will do that. But I don't like to brag how much money I have, you know. I'm not like a lot of people on YouTube. I don't feel very comfortable about showing you how much money I have, you know. But anyway, I'm thinking about this. I want to show you some of my portfolio so you can see exactly where I am, how I trade, the way I sell options to hedge my position. For example, I sell a lot of calls on the Nasdaq, on the QQQ, on all the position I had. So basically, when the market went down by between 10 and 20%, actually my call option went up by almost half of the downside. So basically, I just closed them now because I think we are bottoming. No point to keep them. So I took my profit of my call. I will let all the position rise back again. And if I think it's a bit shaky, I will resell again the call to protect my portfolio. And then if it's a double top and it just go down again, then I will again make the money. And if I believe that it's about to break out to all-time high, then I will leave the position naked. You know, you have to play with options like this, not selling or buying not selling your portfolio, but protecting your portfolio when you think the market is shaky. So you can make 10, 20, 30,000 euro just by doing that without touching your portfolio. I will show you. Okay, have a good weekend. Thanks so much for watching. See you on Monday. Bye.